Buying a home is obviously a large investment, and with it comes some big potential benefits. Aside from the more personal benefits, such as the freedom to create your own space or the pride in knowing that you've achieved a major life milestone, homeownership comes with financial benefits as well. So, how can homeownership work for you and your future goals? Before we get into that, make sure you hit the like button below and subscribe to our Fairway Mid-Atlantic YouTube channel so you never miss a video from us. There's a new video posted every Friday to help you understand the process and benefits of home ownership. Okay, back to today's topic. Through equity you build in your home and the many different ways you can use that accrued wealth for future purchases, home ownership is one of the largest contributors to your personal wealth. But what is equity and how do you even think about using it? Equity is the difference between what you owe on your home and its current market value. Equity is one of the greatest benefits of home ownership, as it can be used later for other large financial decisions such as college tuition or perhaps even a renovation. So let's work through our first example. If you owe $250,000 on your mortgage and your home is valued at $300,000, then you have $50,000 of equity in your home. Equity can increase or decrease based on a host of different variables, such as appreciation or depreciation of your home value. This means that as your house gains value and you continue to make mortgage payments, your equity will increase. It also means that if your home loses value or even falls below what you think you owe, or you know you owe rather, your equity may stall or shrink considerably. Let's talk about a second example. You buy your home at the value of $100,000. You made a $5,000 down payment at the start and are left with a mortgage of $95,000. At the start, you have $5,000 in equity. But let's fast forward a few years. Some things might have changed. Your home's value could have increased to $115,000, and you've reduced what you owe to $85,000. Your equity has now increased to $30,000. You've paid down your mortgage to that same $85,000, but perhaps your home's value has dipped to $95,000. Your equity would only be $10,000. This is the simplest way to understand equity in your home and how it could grow or shrink during the time you own your home, again, based on a variety of different variables. What's important to remember is that buying a house is an investment. Just as stocks go up and down, so can the investment in your home. But don't worry, it's far less volatile than the stock market, and you're less likely to see huge dips in home value without an outside factor being present. In fact, right now, we are seeing large rates of appreciation in the market and equity growing for consumers rapidly. Okay, let's talk about how you build your equity in ways other than simply paying your mortgage. The first thing to consider is down payment. The more you can put down on your home, the more equity you will have from the very start. So instead of putting down $5,000 on your home that's worth $100,000, you can aim to put down somewhere between 10% and 20%, or $10,000 and $20,000. This may not be an option for everyone, but starting with as much equity as possible can set you up for success down the road. Your monthly payments. Home ownership acts as sort of a forced savings and requires that you have a certain amount budgeted for your monthly payments. At the start of your loan, the majority of your monthly payments will go towards things like interest, taxes, and any other fees. But as you continue to make those monthly payments, more of it will go towards reducing your principal balance and in turn build your equity. No, this doesn't mean that your monthly mortgage payment changes. It just means that the allocation of the exact same funds go to different buckets when you pay your mortgage. Nothing for you to worry about, it's handled on the back end. You can also use monthly mortgage payments as a way to build wealth faster. Perhaps you could put an extra $100 every month towards your payments, or make one extra payment every year. This will help you shrink the life of your loan faster and increase the amount that goes towards paying down your principal balance and building equity in your home. Renovations. You can help your home's value increase without relying on the market with smart renovations. Get familiar with what home buyers are looking for in a home and make moves to add those features to your home. For example, upgrading appliances, redoing your roof, finishing your basement, or upgrading the exterior of your home will increase the value of your home and in turn increase your equity. If you want to know the best ROI, absolutely talk to a real estate agent. We'd be happy to introduce you to one. But how can you use equity in your home? The equity you build in your home doesn't have to be just a concept you halfway understand. It can work as a tool for you in your future endeavors. Tapping into the equity in your home can help you with future financial moves such as home renovations, debt consolidation, or repayment, or even buying your next home. So let's talk about a cash out refinance. Now that you understand what equity is and how to build it using your home, let's talk about how to access that money. The most common way other than selling your home is a cash out refinance. When you obtain a cash out refinance, you are both refinancing your interest rate and borrowing money from the equity in your home. It's important to remember that whatever equity you take out of your home will have to be added to your mortgage. So the balance owed on your mortgage after the cash out refi will equal your old principal balance plus the amount of money you take out of the house, in addition to any closing costs you may have rolled into the loan. But you now have the ability to reach in, take out some of that equity, and use that money to fund whatever you need for the future. That is the most common way people access equity in their home. However, it's super important to think about your future goals. What do you want? What are you trying to achieve? And then remember that you have, when buying a home, a huge financial benefit that is helping you build your net worth. So yes, we know equity and the idea of a cash out refinance can be really overwhelming. Don't get ahead of yourself. We're going to take this one step at a time. Make sure you tune into our home buying process videos so you understand kind of the first step, not really the step maybe 2 years down the road, 10 years down the road, where you're thinking about tapping into that equity. All you really need to remember or take away from this video is that by purchasing a home, you are building your personal wealth, and should you need access to it later on, you can absolutely get it. Thank you so much for tuning in today, and we look forward to talking to you next week.